Hi everyone. I'm Toby Turtle, the official mascot of STO Summit Spring 2025. We're excited to share the recorded sessions from the world's leading summit on security tokens and real-world assets. Now, let's dive into today's talk from one of our global leaders. Hey Augustine, over to you.
Next, we have Edward Nwokedi, CEO and founder of RedSwan CRE, sharing his insights on real estate's $4 trillion disruption.
Thank you very much, Augustine. It's always a pleasure to be with you. I really appreciate your efforts on ISTA, as well as your efforts on the STO Summit. Coming from Dubai's Token 2049 last week, I'm still pumped by all the excitement that we experienced there, to know that the industry of tokenization with regards to real estate is live and strong. Can you hear me okay? Can you hear me?
Yes, Edward.
We can hear you.
Yes,
Okay,
okay.
good.
Okay.
So I want to just take the time to talk about something a little bit different. I think that the industry is going through some significant changes right now with regards to tokenization, and not enough has been said about how this is going to affect the real estate industry. And so our team set to examine and do research on how tokenization is going to affect the entire industry of real estate. And we think that today is time to sound the alarm, to let our clients, the institutions, and our potential clients know what's going to come, because I think it's important for people to get ready for this adoption. Because as you know, adoption in technology moves pretty quickly. I don't think I'm going to talk about any investment advice, but just I always put this out here because we want to make sure we stay compliant. What is RedSwan? Of course, you guys know who we are today. I'm Edward Nwokedi. I'm the founder and CEO of RedSwan. We're a full-service tokenization platform and a marketplace of global real estate digital investments opportunities. We started in 2018, so this is about 7.5 years in the business. We've learned a lot, and I think we spend a lot of time in situations like this to educate the public onto what we do and how tokenization is done, to clear up some of the mystifying aspects of the business, and let people know that tokenization has nothing to do with cryptocurrency at all. So what we do at RedSwan, just in case you don't know, we create, mint, and structure digital securities. We mint these securities on behalf of clients, whether you're on the debt side or on the equity side of the balance sheet, and also do our due diligence and be able to issue these on a primary distribution. So through our licensed broker-dealer, we're now issuing securities to investors around the world, U.S. accredited investors, and international investors under Regulation S. After the securities are issued, of course, we have communication with our clients in terms of intercompany communication from the issuer to the investors, declaration and distribution of dividends, and voting issues, anything between the sponsor and the shareholders. RedSwan is the coordinator for that. And then finally, after these investors have held their shares and are looking to get liquidity, we provide a liquidity process through a secondary process. Right now, we have a bulletin board secondary, but we're looking forward to a full-blown ATS. But based on the volume of activity, we don't think we're going to have to worry about a full-blown ATS for a couple of years. But for now, a bulletin board that allows all of our users to see any liquidity is what we think makes a lot of sense in the market today. So why are we here? Because I think we all know that technology has a way of disrupting industries. And once it catches on, it moves pretty quickly. Aside from some of these examples, we all can relate to the World Wide Web when it first came out, and they were talking about e-commerce sites, and people thought that that was, a fad, not necessary. But if we fast forward today, we see that 60% of all transactions in terms of goods are sold via the internet. Amazon's a major player of that. but you can see from the disruption of these three categories, taxi drivers have been significantly disrupted by Uber and now self-driving cars. Painting industry for the art, we're going to digital art into NFTs. So the demands from customers to be efficient, to improve the speed and usability of this technology is always demanding for change, and technology is what I think we rely on to push that change forward. So I kind of want to put that as a preface, because now when you look at the overall assets around the world, roughly 725 trillion assets as an example, these are the various categories. And you can see from these categories that already areas of assets are being put on chain. We just heard from Daniel's last presentation that financial instruments are being put on chain, treasuries, mutual funds. We know people are now taking stocks and digitizing stocks, putting them on chain. And then you see here on the right side of the screen here, which is real estate. There's quite a bit of real estate in terms of global assets. Real estate is the largest asset class in the world, and this is also going on chain. If we focus on real estate because it was the biggest problem of the assets in the world, and therefore for me was the best opportunity to service that problem by creating RedSwan, so we can actually create solutions for our clients. Transparency has been a big problem for real estate. Liquidity has been a major problem for real estate. But in my pet peeve is affordability. I mean, I sold real estate at Cushman & Wakefield, billions of dollars worth of real estate for 18 years. And I only sold to major corporations. My Rolodex was probably 50 deep, and every asset was sold very quickly. But billions of people were not able to participate in that process. So that's one of the reasons why I founded RedSwan, is to make sure that real estate is accessible to everyone, and hopefully that will take place over time. We also knew that by selling real estate creating into securities, that we are selling securities. In order to do so properly, the first order of business was to get a security broker-dealer license. So we set out to get our license with FINRA, and in 2024, we were awarded the license for a broker-dealer with integration of distribution technology, which is very important because not every broker-dealer in the United States understands digital assets, nor do they have a distribution platform for issuing securities. So we feel that that was very special, and we took the time to actually take this technology and develop an open source minting studio with Hedera Hashgraph based on the grant they provided us. And now everyone who wants to issue regulated securities according to LISA standard that the SEC approved can do so with the platform and minting studio we created. And I also want to just thank everyone for being patient with me. I just passed my license last week to become a registered member of FINRA. So I now join my colleagues at RedSwan Markets to be able to sell securities as well. So part of this is deal structuring. I think we look at things from the business standpoint. Every client has a need, and to understand their needs is to be able to provide a solution for those needs. And so what we like to do in most cases is to allow property owners to recapitalize that trapped equity in their real estate. So rather than selling the real estate off and moving on to another one and starting that whole process over again, they can recapitalize the equity in their current real estate and stay on as a 100% GP manager going forward. This is becoming very, very popular. We're talking to major institutions that say, look, it took us a long time to find high quality real estate to upgrade it into the status that it is today, and to turn around and sell it for profit and then have to start all over again defeats our purpose. So you're starting to see more and more operators move away from the merchant build, buy, and sell model, and looking towards how can we keep these assets for a longer term. And I think tokenization speaks clearly to this problem and provides a solution. And this is one of the areas in RedSwan thrives in this business. So when we talk about disruption in the industry, I mentioned, the disruption of how technology is moving and changing, but particularly in the real estate industry, it's very important. Boston Consulting Group, as was just eloquently said in the last panel, has predicted that $16 trillion of assets will be tokenized over the next 5 years by 2030. Well, there's about $380 trillion of real estate overall. We focus on about $75 trillion of real estate, which is an investment real estate throughout the world. And we believe that out of that 16 trillion, about 30%, roughly $5 trillion is going to represent real estate. If you just look at that previous pie I showed you, about 5% will be real estate, which is about $5 trillion that we see as disruption to the real estate industry. And it's very important because there are various areas of real estate industry that will be substantially impacted from this disruption. And I want to walk you through a few of these examples, and just so that you can follow my theory here. This is a chart that shows how we break up that $5 trillion just based on the percentage of relativity of these verticals in the industry. And so you see the REITs and asset managers have probably the largest share of real estate pie, but you also see real estate servicing companies like Mama, Cushman Wakefield, and financial institutions like life insurance companies are investing in real estate. We have family offices that roughly control about $1.4 trillion worth of real estate globally. So real estate is a very powerful investment vehicle that it probably sits about 25% in everybody's portfolio. If you have a professional portfolio, about 25% of your portfolio is probably going to be real estate of some sort. So a significant impact in these various verticals. And the reason for us calling attention to this is because there's going to be winners and losers here. I think those who are quick to adopt and take the technology and use it in a positive manner are going to probably exceed and protect, future-proof their business. And those who choose to adopt later or don't adopt are probably going to be taken advantage of by those who are jumping on the industry very quickly because, as I said, technology moves very fast. So let me give you a couple examples. First, with the areas in which we think they're going to be affected is by adopting to the industry, you're going to receive people, clients, customers who want to take advantage of the benefits of digital technology, the 24/7 ability for liquidity, the ability to hold their assets and trade them very quickly, the ability to buy very quickly, ability to put 100% of your capital towards an investment without a lot of fees and costs. For example, as a real estate professional, it takes us 6 to 9 months to sell a building from one owner to the other. That's a long process. And as you heard the comments of the famous Warren Buffett, who said that real estate is very clunky, which is why he hasn't put a lot of time and invested in real estate, is because the negotiation really starts once you're under contract and things change until you close, and it takes too much time. And I think he's definitely right, which is one of the reasons why tokenization is so important. But also with regards to this conversation, this is why more people are going to be migrating towards a much easier, more fluent way of doing business. And so those who are not adopting are going to lose traffic and customer base to those who are adopting. And those who are adopting are also going to experience better efficiencies in terms of cost and higher profits. And I'll break it down a little bit further for a couple of examples here. People talk about REITs and how they're similar to tokenized properties. Why don't we just put a REIT together? Well, here are 8 good reasons why tokenization is much better than a public or private REIT in terms of efficiencies. And I think that from all the phone calls we're getting from REITs, both public and private around the world, we're realizing these are significant problems for REITs that they need to get past, and they're looking towards tokenization to help solve these problems. You would think that a public company would already have, a public REIT would already have the situation under control, but based on the complexities of being able to move assets around, how to be able to price their assets on a regular basis in terms of bringing them to market every 3 years, probably it creates some friction for these REITs in order to operate. So here's another example of the REITs and what they're going through. This just shows the adoption of REITs customers who are looking now for more redemptions. And you don't have liquidity, then the demand for redemption goes up. And you can imagine that in markets like today, when the price points are down and transaction activity is down, and people are now looking to pull out, but they can't. You can imagine the story that even Starwood had a few quarters ago when they were having problems providing liquidity to their customers. Is because there's not enough cash to provide liquidity on a moment's notice, which means the whole system of REIT liquidity is kind of broken. And so something new has to take place in order to be able to allow a customer to get out of an investment. And you can see the demand for that is increasing. So this is more of all the reasons why tokenization is so important to our industry. And this is what gives me a lot of excitement for as I talk to customers to put together a new business. So just looking at, we talked about Starwood, but looking at Blackstone, I mean, huge REIT with a potential loss of up to $75 billion over the next 5 years. And this comes from, people migrating from a REIT that does not provide instant liquidity to a REIT that does provide instant liquidity, which I think you're going to find that kind of activity taking place. But losing up to $75 billion in 5 years is significant. But look at the cash flow as well that comes from that. And that could be up to, from $2 to $7 billion of cash flow could be lost if a migration of customers move from one REIT to another one just because they wanted the effect of digital technology. And there's not only just the liquidity, it's the ease of being able to buy an asset. So if people have a lot of their capital in stable coins or in cryptocurrency, for example, and want to be able to balance out their digital portfolio, then rather than have to convert their stable coin or their cryptocurrency into fiat cash to be able to buy into a REIT, they'd rather be able to buy into a REIT that already has digital assets and accepts digital currency. So I think there's a major benefit for those companies that are starting to move into digital assets and attract that digital currency. As we're seeing the CAGR of stablecoins growing at the rate of 20% per year, that's a very large number. I think they're over $2 billion right now and growing. And so if you're not being catered to that form of currency, digital currency, means that as cryptocurrency and stablecoins continue to grow, then a entity is missing out on that M1 supply, which is terrible. If it kind of goes right back to the same analogy of the e-commerce market, that if you're not there on the channel so people can see your product, you're more likely not going to be able to sell your product to the masses. So that's one of the major issues. Another example would be here with CBRE, is the example of the real estate industry. As I was in this industry for a long time, we generated roughly about $70 billion a year of transactions in capital markets. Well, as RedSwan and others in the industry are successful in converting real estate from analog to digital assets on chain, we're removing the inventory in which companies like Cushman & Wakefield, CBRE can operate. And therefore, in order for them to make up this lost revenue, they're going to have to get licenses to be able to sell shares of real estate. But just think about the adoption effect of clients who are begging them or asking them to please tokenize my assets because I want to now take advantage of these beautiful opportunities. and they don't have the capability of tokenizing assets or selling shares, then that revenue is going to be lost because that client is going to go to someplace else where they can get the service they're looking for. So that's a huge impact on this business. We see for this particular company, almost $675 million of lost revenue, which means another company or companies that are attracting and providing digital services will be acquiring $675 million of revenue. So this is, like I said, a game of winners and losers, but it's really a display of why adoption needs to be done early. And so we wrote this disruption report a few months ago, and it's about 65 pages, so it's a very substantial report. And I encourage you to take a shot of this QR code just so you can get a copy of the disruption report, because in it has very powerful information that I think you can talk to your clients about that will really, I think, wake them up in terms of what's happening in the world, so that your client will not be subject to this significant disruption that's taking place. I like to also just talk about why this slide is very significant to me. This slide really captivates where money is moving. And here in the United States, about $156 trillion of assets, which is broken up by demographics. And we can see that roughly $42 trillion is in that pie, which we focus on as RedSwan, but also $85 trillion of this capital, these investments are moving to the millennials. Well, that's very important, because if you're in business, you need to follow the money. And if the wealth transfer to millennials is going to be $84 to $85 trillion, then you need to understand how millennials are spending their money and what they're doing with that capital if you want to be able to receive the benefit of that capital and that movement of capital. This shows you that the generational division of users and investors around the world tells you how much assets they held in traditional real estate and how much they held in digital assets. And you can see from the baby boomers that very low amount of digital assets, but a very strong amount of traditional real estate assets are being held by the baby boomers today, which is why we're having this kind of a challenge of adoption. But as you see it progress into other newer generations, their increase in digital assets is taking place, and the decrease of traditional real estate is taking place. So as you look at the millennials here, you're seeing that 48% of their assets, 48% is digital, which means that if they're going to be buying assets, they prefer digital over non-digital. And as you move on to the Gen Zs, is even more attractive, that they're 55% focusing on digital assets. So following this money, this $5 trillion just in the first 5 years going towards digital assets, is where we're putting a lot of our time and attention to, because these kind of numbers you just can't ignore. So RedSwan is really focused on building a platform of digitized real estate on chain and making it available for global investors to be able to invest in a variety of different properties. So our pipeline right now sits at about $9 billion of assets that are in 3 different parts of the world. And hopefully that's going to increase. Just coming back from Dubai, we're seeing even more opportunities in that market from large institutions. And so let's get into some of the digital assets that we're sharing with our customers and hopefully with the rest of the world. First of all, we're starting with our US liquidity fund. This is about 45 assets that we're putting on chain. They're being digitized to absorb into our fund so that people can actually buy a variety of assets of hotels, multifamily, industrial, and retail properties in the US market today, where I think the price points are pretty exciting and attractive, and the yields are also very strong. And so we're seeing a lot of international demand to come into this marketplace. We also have an Africa fund that we're focusing on student housing. There's a very strong demand for student housing, which is an area that we think is important for the growth of the African continent, but also focusing on educational aspect where those universities may need to be improved, updated, in order to, be more thriving. And so I think RedSwan wants to figure out how we can help these universities, and also provide accommodations for their students. And then finally, you see that the GCC fund, that was a very large assignment, roughly $3.5 billion of high quality mixed use product. We're taking this into the market very slowly. We're really trying to find institutional investors that will buy large chunks of this. These are Sharia compliant assets, and there's a lot of institutions that are interested in Sharia compliant portfolios. So this is kind of our focus. Of course, this is myself as the CEO, but also we're very proud to have a very educated CTO and co-founder down at Para. And we also have in our RedSwan Markets leadership, this is our broker-dealer division, Martha Theus, who's our compliance officer, and Charles Smolvitz, which is our operations executive for the RedSwan Markets broker dealership. So I just wanted to make this shout out to everyone with regards to the emerging disruption that's taking place. If there's any questions, you can probably talk to me afterwards. I don't want to delay this process because I think Augustine's doing a fabulous job with the STO Summit. But I want to sign off here and leave it at that. But hope you guys enjoyed the content. Thank you.
Thanks for joining us at STO Summit Spring 2025. Stay curious, stay connected, and remember, the future is tokenized.